Hey, you know, there's an old Chinese proverb I always like to refer to that says, may you live in interesting times. Well, it's safe to say we're there, folks. There's a good and bad and a yin and yang to that. Let's start with the lots of news this week, but let's start with big news in Canada. The Bank of Canada making rate cuts, which is following the trend that started yesterday with the U.S. Fed cutting rates south of the border. The Bank of Canada, as widely expected, followed suit this morning. Now, what was pretty interesting is they're calling this the virus rate cut, and it could be Stephen Polis's swan song. Stephen Polis being the Bank of Canada governor. Looks like he's on his way. Well, he's on his way out. This is his final term. So, as a final last act, let's cut some rates. May not be the last one. Let's see him follow that, see how that impacts the Canadian economy. Meanwhile, south of the border, oh my goodness. Last week we saw stock market do this total crash. Everybody freaked out. Somebody phoned me on Friday and said, I've lost this much money. I said, did you sell? No. Well, then you didn't actually lose. I was preaching patience last week, and sure enough, on Monday, the markets rallied. And then what happened Tuesday? So you got this crash last week, and then on Monday, the markets come back. And then what do you have happen on Tuesday? The U.S. Fed announces a 50-point rate cut. And right away, the Dow sinks 2.9% after a rate cut fails to stem the market's dread. So, hey, listen, bottom line is everybody's well known that Warren Buffett's quote that the markets are driven by fear and greed. Two things, fear and greed. And we saw the greed as the markets kept climbing up to record highs. And then we see the fear with the coronavirus scare. It's going to be very interesting to follow this as it plays out. Now, people being impacted are those who are pensioners who might need to be selling their stocks and bonds now because they need the money. But if you don't, just ride this out. Things go up and down. Nothing goes up in a straight line forever. Nothing goes down in a straight line forever. But I will say this is another reason why, I'm looking at website here called The Street, and it says 4 reasons why investors should consider investing in alternative assets. And this is what we've been talking about at Diversify Alternative Investments for a long time. And again, it's not that one thing's better than the other, but it's a simple fact. If you are diversified into some alternative assets, for example, a mortgage investment corporation or a real estate investment trust that does not trade on the stock market, those assets did not change in value last week. Your stocks and bonds do well over time, but in the meantime, you're going to have the roller coaster of the market, and it's called volatility. That's what it is. And there's going to be market volatility. We're in for interesting times, whether this coronavirus does something or not, whether the U.S. Fed makes further rate cuts, et cetera, et cetera. All these things impact the markets. Having a portion of that is not correlated, in other words, not trading on the stock market, a portion of your portfolio that's not correlated to the stock market, it's just a prudent move. So if you'd like more information on that and how you could diversify into non-correlating assets to supplement what you already have in your RSPs or TFSAs, give us a call, send me an email, peter@peterkinch.com. And until next week, we'll talk to you soon. Have a great week. Thanks for now. Bye.